Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide valuation and mediation services based in St. Louis, Missouri. Today, we're actually kind of building upon a prior discussion that we had, but we're going to be discussing the pandemic economy and divorce with Josh Shilts and Patrick Kilbane. Josh's practice is really focused on complex financial matters and disputes. He's a frequent lecturer on forensic accounting topics and has been involved with hundreds of forensic investigations dealing with matters involving personal and business disputes, as well as the identification and mitigation of fraudulent activities. He's also provided expert testimony in commercial and family matters surrounding business valuations, economic damages, fraud, and other disciplines having to do with accounting and economics. He's a forensic valuation expert and offers tax advice in the state of Florida. Pat, on the other hand, is a wealth advisor with nearly a decade of experience in helping clients coordinate their wealth management plans. He's also general counsel for Ullman Wealth Partners. He is the director of Divorce Advisory Group, where he assists, guides, and supports clients before, during, and after they begin the divorce process. He helps high net worth clients make financial decisions at all stages of the divorce process by using his family law experience, his wealth management experience, and his certified divorce financial analyst designation. One thing that I think you could give a perspective on, Patrick, is just in general, should we be preparing for a correction in the market? How should we, prospectively, what do you see happening in general that's going to affect business, or even a topic that we can kind of, start to dissect a little? Because there's so much changing. I don't even know what to think about going forward.
Candidly, Melissa, if I knew the answer to that question, I would not be on this podcast.
Oh.
I would be inviting you and Josh to come visit me at my island home with a money printing machine sitting next to me.
I love it. Yeah.
Look. There were articles pre-November 2020 about, is value dead? Is Warren Buffett, is he lost his edge? And then what happened to value in November of 2020? It was up 20%. Mm-hmm. I mean, there are some fundamentals that, large growth may have had an out-of-body experience relative to small value, but just when you least expect it, that small value premium came roaring back. And the way that we do it, we build a portfolio, and when the market gives us an opportunity to rebalance that portfolio, we do it. Mm-hmm. There's no emotion involved with it. We just do it. We rebalance. And some of our clients, between February 19th and March 30th, we rebalanced some of their accounts 4 and 5 times. Mm-hmm. We rode that trend all the way down, and none of us knew that March 23rd was going to be the bottom before things all of a sudden shot back up. So what I would tell the personal investors on the call, maybe this is different for business owners, but you have a plan. You can't be emotional about it. Whenever economic conditions present themselves, you have to act. You have to act without emotion and be disciplined about it. And that's what we've always done. And going through that just made me even more resolute in our process, because nobody knows. If we would know what asset class, like Josh, you were talking earlier about commercial real estate inventory. One would think that it would be plentiful, but it's not. People can't understand why housing prices are so high. Well, if you dig into it, you see that there's a housing shortage in America relative to demand. So it makes sense, right? And again, back to what I said earlier, there are so many different variables. The world is so interconnected that there's not one if they're telling you that they know, they're lying.
Mm-hmm. No, I think it's very hard to predict going forward, other than to continue what you've done in the past, or reassessing everything. But I also think from a business perspective, you know, we've done some deals in the past during the pandemic. And the reality is, and I was talking to another client, the reality is there are a lot of companies that are really in the middle market, right? Not the huge ones, not the teeny tiny ones, but like good middle market that maybe from a cash perspective weathered the storm a little bit better than other people. Like to what Josh was saying is that, why are you sitting on so much cash? Well, they started to take that cash and they started to do cash deals, which, you know, in the past, it was always like, how do you debt finance this deal? How is somebody going to get money? Well, these guys are sitting on, you know, so we've had several full cash deals happen. And it's changing how some of that lower middle market is transacting. So at the beginning of the pandemic, it's sort of like, what are you going to sell and get nothing for your business? No, they're getting something for their business, and it's a cash offer. So if you guys started to see even some, because we're seeing the offers even come in during the divorce, because, you know, you ask for, do you have any offers to buy your company? And they're like, damn it, yes, we did. You know, those types of things are happening even when the companies are not necessarily profitable, you know, because people are taking opportunities to expand and maybe get deals.